It seems like we got a rosy scenario there from the head of NAM. How are your clients looking at what we're now seeing as the broad outline, this 9-page document, the unified framework?
Well, what we see in the framework are right now, a lower top bracket of 35%, but a hint that there would be another bracket added for high-income individuals. We don't know what that bracket might start at. We hear thrown out there maybe $1 million of income. So right now we see a tax cut from 39.6 in the top bracket to 35. But we're paying for that by losing itemized deductions. So the deductions that seem to be protected right now are mortgage interest, perhaps with different limitations, and charitable contributions. But the pay for is giving up the deductibility of state and local income tax, real estate taxes, medical, and potentially interest expense. So
broadly what you're saying is the people that are contacting you are not pleased yet about this?
Well, the calls I'm getting, particularly from people in high tax states, is this doesn't sound like a tax cut for high-income individuals, and I say that's absolutely right. At best, for high-income individuals in high-tax state, maybe it's a push. Maybe it's not a savings, maybe it's not a great cost from a pure income tax standpoint at the individual level.
Now, we have top economic advisor Gary Cohn saying that the president is actually open to negotiating on the deductions that individuals take for state and local taxes. So are you telling your clients to hold off and just wait and see what happens?
Well, I think there's planning to be done, and at EY we call it no regrets planning. What can we do now that you wouldn't think was a mistake when this tax reform bill comes out? So, for example, if you're in a 39.6% top bracket right now, you may get more bang for your buck this year in terms of itemized deductions that could potentially be either disallowed or at a lower rate in the future, and that would be charitable. Charitable is allowed currently. You'd get a 39.6% deduction and may be protected in the future, but maybe the benefit's lower. State and local taxes, be sure to pay your liabilities this year, get the benefit of that deduction, which could be entirely lost in the future.